The history tells us that the 12 months following the halving are the hyperbolic move cycle. And that makes sense. Basically what happens is the fair value of the network doubles. And then in a normal cycle, we go to 2.3x fair value because of the FOMO and all the momentum and the leverage. But I think leverage is lower this time. I think we double this time. So let's say 150, 160. And that would be by April, May of 25. Exactly. So by the end of this, now, I think it all depends. I've been saying that this is going to be the best Thanksgiving ever, right? And people are going to celebrate the crypto people in the family this year. And so if that FOMO period is like the previous two, where from November to December, go up orders of magnitude. I mean, remember, we went from 10,000 to 20,000 in 8 weeks.
Mark Yusko, founder and CEO of Morgan Creek Capital Management, has given his latest bullish price predictions for Bitcoin for the 2024 and 2025 bull market. Yusko believes this particular cycle will be unlike anything we've ever experienced, with Bitcoin's price potentially skyrocketing from $150,000 to $160,000 by April or May of 2025. Yusko observes that after each Bitcoin halving, a hyperbolic move cycle usually follows within the subsequent 12 months. However, he also recognizes additional distinctive factors that could influence Bitcoin's growth during this cycle. With the recent halving event reducing Bitcoin's issuance of new coins by 50%, Yusko anticipates a supply shock that could drive up its price to exponential levels due to decreased availability and increased scarcity. This, combined with the currently growing institutional demand, will create a massive surge in the market, boosting Bitcoin's price to newer heights. Let us now view clips of Mark Yusko as he explains why this cycle may be different than the previous ones.
There are multiple factors in markets, and the biggest one really is supply and demand. Basic Econ 101. And we had a pretty significant demand shift. And it hasn't fully played out. In fact, it hasn't even come close to fully playing out. The math that always amazes me, I believe, in the next 12 months-ish, so we're a couple months, about 3 months into the ETF, and we've gotten about 10% of what I believe is coming into this space from the registered investment advisors that control all the boomers' cash. So the boomers have 30 odd trillion with these financial advisors. There's going to be 300 billion, I believe, that's 1% of 30 trillion, that comes in to this space. Scott, that's actually more money than has ever converted to Bitcoin in 15 years. That's a pretty amazing thing, because what people forget is that multiplier effect of the bid ask, right? I convert some fiat into Bitcoin, but then I don't want to sell it. So someone's got to bid a higher price to get me to sell. And so you get that multiplier. Now, I don't think the multiplier is whatever Bank of America says, 118. Yeah, when we were talking pennies or dollars or $10 or $20, the multiplier was really, really big. Today, I'm going to say the multiplier's probably more like 20-ish, So 300 billion would add 6 trillion of market cap. This idea that number go up, that's not the point. The point is the utility is going to continue to go up. The embracing of the technology is going to continue to go up. And at the end of the day, it is a finite asset. People say, well, that Satoshi could show up and add more. No, Jameson Lopp showed us the lines of code that prohibit that. And the thing is, fine, could 51% of the participants change that? Sure. But the likelihood of that happening is really low. And the reason behind it, why it might happen, could be really interesting. So it's kind of like a stock split. But all of that aside, the demand for blockchain technology, of which Bitcoin is a blockchain. I love this whole debate, right? Bitcoin, not blockchain, blockchain, not Bitcoin.
Yeah, of course.
Like they're the same thing, right? We have the Bitcoin network, that is a blockchain network, and the Bitcoin token, which secures the network through block rewards. I don't know why we debate this. Just makes no sense to me.
Mark Yusko also shares his opinion regarding a recent report from the International Monetary Fund, or IMF. This report acknowledges Bitcoin's growing adoption in cross-border financial transactions, especially in countries with strict financial regulations. Residents of these countries are increasingly turning to Bitcoin to move capital across borders more freely, as Bitcoin's decentralized nature of Bitcoin allows users to bypass traditional banking systems. The IMF report emphasizes that Bitcoin is becoming more and more widespread in countries like Argentina and Venezuela, where hyperinflation and strict financial regulations are prevalent. However, the report also warns of potential risks associated with Bitcoin's use for cross-border transactions. The report states that the anonymity provided by cryptocurrencies can complicate efforts to monitor and control financial activities, potentially facilitating illicit activities like money laundering. Let us now return to Mark Yusko as he shares his thoughts on this report.
It's probably a fad, right? That one of the largest, global lenders that is acknowledging that, there's this new technology and it kind of threatens our hegemonic control of, look, if you want to impoverish a nation and control it, you lend them a bunch of money that they can't pay back, and then you seize their assets. And it's worked really, really well. And it works really, really well because the dollar has been this hegemonic currency, but that's now under threat. And threat has a negative connotation. It's evolving. And the reality is the dollar has not been the global reserve currency for the entirety of the world's existence. It just hasn't. In fact, it's only been the hegemonic currency for a very short period of time, about 80 years. And okay, yes, all of us who are living right now, that's our life cycle. But the reality is history is replete with examples of other countries, Portugal, Spain, Netherlands, UK, having the upper hand, and they use the same process. And so lending to governments has been how you control things for centuries. And, the fact is, if I want to send money to, I say, my mythical, mother-in-law in El Salvador, who happens to be here in Chapel Hill, she just came from Tulsa to visit, but if she were in El Salvador and I wanted to send her money, I would send $1, and Western Union and the Bank of International Settlements and a whole bunch of other people would take their cut, and she'd get 70 pesos. Think about that, a 30% slippage. If I used the Strike app and sent her across the Bitcoin blockchain, she'd get 100 pesos. That's better than 70. Speed and low cost are really, really important. I mean, I've had this debate with people recently. The fact that the Solana network crashes all the time and it gets overloaded and transactions fail, yeah, that's a problem. But the reality is when it works and I can send USDC instantaneously for fractions of a penny anywhere in the world, that's better. And someone asked a question I thought was interesting, said, if Ethereum didn't exist and it was invented today, would anybody use it? That's interesting, right? Because it is slower and more expensive than Solana and others. So why would you go that way? Well, the reality is it wasn't invented second. It was invented first and has a larger installed base of developers. So it's not the best technology that wins. It's the technology that gets critical mass first. That's how winning wins.
How do you feel about Mark Yusko's bullish predictions for Bitcoin this cycle? And do you have a price target of your own? Share your thoughts in the comment section below. If you found some value in today's video, we would appreciate it if you hit that like and subscribe button. Lastly, if you would like to be updated with all of our future updates, please tick that notification bell. Your support encourages us to create more content on the latest relevant news in crypto. Thank you for watching. We hope to see you in our next video.